April 19th edition of Back Roads of Illinois with Cesar Delgado. We were Central Illinois agriculture source and the Midwest alongside in Central Illinois agriculture. Welcome to the show with us for today. Our guest today is Ted S. from Zenra Hedges out of downtown Chicago and Jason Minter with Bloomberg News and Mac Marshall from the United Soybean Board. We were talking about Brazil's soybean production from Mac Marshall. We were talking about the commodities markets with Ted S. from Zenra Hedges. We were looking at the quarter with Jason Minter from Bloomberg News. We were going to talk about the livestock market and commodities markets with Connor Bridgman from Advanced Trading in Assumption, Illinois, and Brady Huck in Dodge City, Kansas. This time is for your agricultural news on Back Roads of Illinois. The stock from South America, its lowest prices. The soybean markets are reaction to the weather in Brazil since December. Soybean yield is turning out to lower than previously years since 2018. The Department of Agricultural estimate is coming to be lower supply. I visited Sam Hudson out of Brimfield, Illinois. Sam say that the cattle herd it's cold outside of the agricultural industry in the news and media about the livestock health. Unfortunately, that's not so good with the cattle farmer and ranchers. Finally, the weather models indicate that it is going to be crazy. This weekend is going to be cold and wet in central Illinois and the Midwest alongside in the Mississippi River Delta. This is your agricultural news on Back Roads of Illinois. We were coming back with Jason Minter from Bloomberg. We were back with Jason Minter and Mac Marshall, Ted S.
Hey, good morning, Cesar. How you doing?
Welcome to the show. How are you guys?
Doing well. Can't complain. It's springtime. Talked to some farmers this week on our board, and combines are starting to roll in parts of the country. I think we got 3% of the soybean crop in ground right now. I know some farmers are managing through some weather, waiting to get back in the fields, but by and large, most people I've talked to, things are just it's very early, but things are moving along as they should. And it's always fun when you get the combines coming out in the fields again. Hallmark of spring.
I'll give what's interesting, from the financial markets perspective, everything that's disruptive creates a lot of chaos, right? So it's great to see that we're getting rolling with the planting season in the U.S., and that's really exciting. Gosh, interest rates don't look like they're going to come down, so that's a cost we all have to worry about. And then, overnight we see more, kind of flare up in the Mideast, so that could drive oil and fertilizer prices higher too. So it's great that it's spring. There's chaos everywhere.
Yeah, lots of uncertainty in the markets now. It depends on the day. Some days we're very focused on grain fundamentals and weather and livestock and things like that. Other days we're, watching geopolitics and global conflict. And sometimes, market analysts, we have to, we have to stay in our lane and focus on, grain fundamentals and whatever. And other times we're, global conflict analysts, which isn't really what we're trained to do, but here we are, and it's okay. We've been global trade analysts. Well, and that's part of what we do, but trade war analysts, swine flu or pandemic, whatever. We do everything. It's great.
It's kind of amazing just how as you said, Ted, like where we have to become geopolitical analysts and strategists through all this. Really just underscores like ag just touches everything, and everything touches ag in its own right. So when you've got these disruptions on the other side of the world, which are seemingly disconnected from what's happening in the fields of the US, they're anything but inextricably connected. Trade lanes, shut down, logistical issues. Yeah, lots to consider. It's risk management, I think more critical now than at any point before. Not that it hasn't always been critical.
I liked it better when I just had to be an amateur meteorologist, but 20 years of that too. So hey, it's okay.
Yeah, I think we all tacked on unofficial analytical designations over the last couple of years that we didn't ask for.
Let's start with our conversation about your sources for the Brazil situation with Ted. Ted, give me your thoughts on Brazilian production.
Great question, Cesar. So I was just at the USDA data users meeting here in Chicago on Tuesday. And obviously, when you get to the question and answer portion of the data users meeting, everybody wants to know what is the deal with the huge difference that we have between USDA's estimates and, say, CONABI, the Brazilian USDA. Because those numbers have been different in the past, but we're looking at record large spreads between the two, especially in corn. I mean, we talk about soybeans more often than not, but especially in corn. And really, when it comes down to it, the USDA says, well, we look at their census export data, and we look at the imports going into China. We look at all the Brazilian demand from their crushers or Above. And when we put all their demand figures together, there's no way that their production can be as low as what CONABI has been saying for the last few years. So they've had to go back and raise Brazilian production higher. And so that realization for them kind of happened really in the middle of the wintertime. It's just sort of a slow realizing thing for them. And they've realized that their 163 million metric ton estimate for the Brazilian soybean number was much, much too low. I actually got them to admit that on in a recorded meeting. So that's nice. When I asked them, specifically Joanna, what number they should have started with, she said that they're not allowed to share that information. Okay, fair enough. But I suggested that my number was a 171 as opposed to their 163. She smiled and she nodded and didn't say anything. So I'm assuming that it should have been somewhere in that number, around a 161, instead of their 163 where they started. So if you look at it in the context of that, right, I think that number should have been a 171. Now we're down to a 155. Well, okay, now that is about a 10% reduction in their overall crop, which is a lot more reflective of what has happened weather-wise in Mato Grosso, and so on and so forth. And so that makes more sense. Now, the other thing I will say is that when you look at CONABI numbers, they're a government agency just like the USDA is, and the USDA itself is struggling with having the funding to do everything that they want to do. In fact, they're having to get rid of county level yields for both corn and soybeans because they just don't have the budget for it. It's about $10 million that they don't have to do those surveys. But then you think about CONABI, and they're way significantly less funded than the USDA. They have nowhere near as many people. And CONABI does a lot of their surveys, a lot of similar things that the USDA does, but they just do it in the traditional growing areas of Brazil. So places up in the north, the growing areas that are surrounding that northern arc, or the largest or the largest grain terminal arc in the world, deepest water ports, grain terminals in the world. They had 5 or 6 years ago tried to really proliferate those growing areas, but weather pretty much wiped them out 2 years in a row. Then they kind of moved away from that, and so I think the rest of the world just felt like that was a failed experiment, and those acres are just not going to get planted again. But now I think what we're realizing is that they've gone back to it, and with the recent weather and the different weather patterns that they've had, it's actually been really successful. So I think that's where the discrepancy comes from between Cannabis and USDA, is that Cannabis just doesn't have people in place to be doing surveys in some of the areas that we have kind of written off as fringe acres and failed experiment or failed acres. And so it's a difference. I'd say yield might have something to do with it, but it's really about the area that's been planted in Brazil. It's much bigger than what Cannabis is reflecting. And that's just simply because, just like the USDA, they only focus on, say, 80% of the growing area, right? Because you just can't cover the entirety of it. And for Brazil, that percentage of growing area that isn't being covered by Cannabis has grown and become more significant, and therefore had a much bigger impact on what their overall production is. That's my best take on the matter.
Yeah. Ted, I really appreciate
Yeah,
the rundown there.
it's frustrating for Brazil since December, but we hope that helps for U.S. soybean farmers. Meanwhile, I am starting to see the prices are currently down. Also, the weather.
Yeah, I think U.S. farmers would like to believe the narrative that the Brazilian crop's only like a 140, 142 instead of the 155. I think the fact of the matter is that's just not.
Just kind of reading about the downstream industry in China, and what it's looking like in terms of pork demand, and how they're kind of continuing that post ASF rebuild. And I think the targeted sow rebuild number was taken down from 41 million to 39 million. So by reducing that breeding herd, you have to look at that, I think, as a little bit of a demand headwind as well. But to your point, Ted, I mean, they'd be even with a demand headwind like that, there'd still be ample opportunity for purchasing more beans, or at least forward contracting more than the 18 million bushels that are on the books for new crop beans right now. So I think that's part of what's playing in here. When we think about the USDA numbers as well, I think it's also important, like the last year's crop kept getting revised up, I think, after initially getting pegged lower. So there's that factor in here as well. And again, to your point, like, you tally up the balance sheets and everything, and there's a good size down there, and that's a lot of what's weighing on the markets for farmers here. And of course, there's also a decent amount in inventories here. I think March 1 stocks were up maybe 14 or 15% from prior year levels. Like, we're like 1.85 billion bushels.
I'll just throw in a.
Could you explain the acreage dilemma in the beans? Could you explain to our listeners about these issues?
Yeah, so at the end of March, USDA came out with one of its flagship surveys, the one that's not on the budgetary chopping block in terms of its prospective plantings and grain stocks reports. And these are, two really critical reports for getting an early read and a gauge on what this next marketing year could look like. I think we came in with about 86.5 million acres thereabout. Basically right in line with what the market was expecting before the report. That, I think, combined with that year-on-year gain in March 1st inventories, coupled with that large Brazilian crop that's down there, and that headwind from Chinese demand, and you certainly see that reflected in the export numbers. These are all bearish factors that are weighing in on the U.S. soy market right now. Of course, when we turn over to the co-products and think about the value drivers for soy between meal and oil, We've had soybean oil trading increasingly like an energy, so a lot of volatility there, and kind of following and moving along with crude oil prices. So that's kind of been going back and forth, whether it's between conflict in the Middle East or or developments here domestically in terms of renewables and growth opportunity. So lots of things coming together, but
not to step in front of you here, man, but you look at a soybean oil chart, and what it's been doing, since September, basically, and we just set new contract lows, or no, not new contract lows, but new lows for the calendar year, and actually new lows since last June in soybean oil. But at the same time, you've got crude oil that, as recently as in the overnight session, but I mean, go back to last week, we're trading in the upper to mid to upper 80s in crude oil. So I've heard this soybean oil trading like an energy, and I've heard this comparison being made between soybean oil and crude oil. But the charts tell an absolutely different story. And the fact that we've got soybean oil stocks growing, we have a record crush, right? So, the production of soybean oil is really increasing. But we have stocks that are the biggest level that they've been in well over a year. So, I mean, I think you got to look at those as two different sets of fundamentals. Yes, soybean oil is increasingly used as an energy more and more than it ever has in the past, and that will continue. But I don't think we're to the point yet where we are trading it as an energy. It's still a byproduct.
Yeah, no, it's I'd say like an energy versus as an energy, two different things. The verbiage there matters. Like, and you have that divergence, I think, over the last week or so. But you have been seeing like that, that relationship, I think, come more closely together. The nuance matters, but yeah, point taken.
Yeah, it's probably worth. Yeah.
What is the forecast for acreage report on June? Ted and Jason.
And I'll let you take that. I'll let you take that one first.
So Cesar, a lot of that depends on weather, as we know, right? I will contend that we didn't lose 6.3 million acres of overall crop area to strip malls and subdivisions. I do think there are some fringe acres that won't get planted because the value proposition isn't quite as good as it used to be, mainly because of high interest rates, but also, inputs and really everything. But there's a lot of those acres that are very high dollar acres that will get planted to something. And, with the amount of time that we've had for field work in the fall and even again in the spring, now that's slowed down because of the recent rains. I think a fair amount of those acres will go to corn if we have the window of opportunity to plant it. I actually think that the rains that we've had over the past 2 to 3 weeks are going to be more encouraging for guys to get out there and plant corn or increase corn acres, because we feel better about the subsoil moisture that we have now as opposed to where we were 3 weeks ago. I think very likely you find an extra 1 million to possibly even 2 million acres of corn, and not at the expense of soybeans or really any other of the principal crops. Just because the mindset is really, with lower prices, we don't reduce acres usually. With lower prices, what we try to do is we try to increase our bushels, because we figure we have to outbushel the price. We have to have more bushels to make the same amount of money as we made last year. And that's a function of crop insurance, unfortunately. And it gets us into these cycles where we have these, overproduction periods that can go on for multiple years. I mean, look at 14, 15, 16, 17, 18, 19, right? We're headed towards that again, right? Unless we have this, consecutive 2012 type disasters, which who knows if we can even do that again. I mean, look at last year's growing season. It was one of the most challenging growing seasons that we've seen since 2012. And yet we still ended up with a 177.3 national average in corn. So I don't know. I am very skeptical that those acres are gone. And I'm very skeptical that that we don't see a pretty sizable increase in corn acres, and I still think we'll have the 86 million in soybeans.
I'm gonna take the I think you never bet against corn, but on the other hand, I just want to take a look at the cost side. I mean, I think my bias is towards soy. I agree. I think in total, those acres will be planted. I'd actually argue for the soy side to be a little larger than we expect. And I think of that just in terms of risk. I think people look at price ratios, but what we saw happen to fertilizer prices when Russia invaded Ukraine, and now we see the Mideast sort of heating up. Even if
We were back with Connor Bridgman and Brady Hawk from Advanced Trading in Assumption, Illinois, and Dodge City, Kansas. Welcome to the show. How are you guys?
I'm great, Cesar. Thanks for having us again. Looks like it's a nice sunny day, so looking forward to talking with you and Brady.
Same. Glad to be here as well, Cesar. Thanks for inviting us both. Going to be fun. Always fun to work with Connor here and get to.
You don't have to lie, Brady. It's okay.
Bring the ATI Pro Media show to you, I guess.
Let's start with our conversation about this planting season in central Illinois and across the Midwest. Start with Connor. Do you see the planter in the field?
Yeah, Cesar, in my immediate area, we were wet beginning of the week. You saw a very limited amount of beans being planted. Sprayers were going, some nitrogen application. And then the past 48 hours, I saw planters rolling. I saw dirt being worked. But then we got, in some spots, over an inch of rain. We had a big front move through. So that's really going to slow guys down. And then the other thing in my immediate area, or I think, even in most of Illinois, we're getting some really cold temperatures. So made a lot of guys, even if the conditions were right, I got to imagine they were hesitant about planting too much corn. But we have seen some beans go in the ground, and then you don't have to go too far away. The western side of Illinois has really been able to go for the past 4 or 5 days. So I got to think, just based on Illinois alone, I bet we're going to see that planting progress number really jump up Monday.
Me too. I saw a lot of farmers in central Illinois on Wednesday.
I heard up by you. I call your part of the country North Central Illinois, and of course, where I am Central Illinois, but I guess I'm Southern Central Illinois. But yes, I think you saw a lot of action there too, where you are, and then going west as well. But I gotta think we're gonna be out for the weekend, I would assume. But tell you what, it always catches me off guard how fast they get back in the field if we get the right temperatures. The cold temperatures, I gotta imagine, is going to put the brakes on a little of guys getting too excited, I would think.
How do you see the cattle herd in Kansas about the bird flu? Brady.
Yeah, good question. Good conversation piece here, Cesar. Avian influenza, certainly a lot of noise out there about it. I think there were a few more cases detected this week in Kansas and in Michigan in dairy herds, dairy animals. They're certainly doing more testing, and I think as you do more testing, you're going to find more positives if you do some more testing. I think we live in a world where we have a mass amount of information, and some of it is misinformation. You got to be careful what stories you read and what you look into with it. There's a lot of sensationalism with avian influenza, but you don't want to take it, and completely disregard it and ignore it, because we want, animal health and quality of our milk and beef products to remain safe. And I think that's the bottom line here. is that milk and beef products are safe. That's an important message that the consumer needs to understand. And it's also important to understand that the avian influenza in cattle isn't a terminal disease. It's something that, is resulting in, sick animals and decreased production. But not, not terminal. Uh, I think the harder we look for stuff like this, the more we're going to find. There's so many unknowns. It's just an example of the headline risk in these markets. Funds are long. It led to some long liquidation. It's great to see stability in the cattle market. Cattle had a great week this week in feeders and in live cattle. Producers, we got to understand where our risk is, and it's to the downside. And we always got to be cognizant of that, especially when funds are long. Good question, Cesar.
The Department of Agriculture in Kansas. They have to go to have some restrictions on shipping from Texas, right?
There's It's another good question. There's a requirement for all breeding age animals to have health papers as they move across state lines. Um, so that's important to understand that there's already some health and safety protocols in place just for breeding age animals to move across state lines. My dad is a veterinarian at Winter Livestock, and my grandpa's a vet, so I got a long history of vets there. I'm no vet. I'm the black sheep of the family as a commodity trader, but I get some good insight into what is required of them on a day-to-day basis. But any animals that leave Winter Livestock or any sale barn or across state lines have to have a health paper with them that are breeding age animals. There's some requirements now that they check an additional box and do maybe some additional alerting of officials in other states to do some more screening of those animals as they go transfer from state to state. But some of those, I think some of those announcements maybe were to provide some sense of surety and comfort to that we're doing things the right way to, improve the animal husbandry and ensure quality and safe health, food safety. And they can be taken out of context sometimes for people who are looking to spread the wrong message.
Not good for the agricultural industry in the Midwest.
Yep, certainly some uncertainty there.
How are the grain market for today's close bell in downtown Chicago?
Yeah, grain markets closed up today. Corn was, May corn up 6 3/4, May soybeans up 16. We've got wheat up close to 14 cents, up 13.5 for May wheat. And so some really positive price action, because right now what's going to dominate the headlines today and more than likely over the weekend is going to be that Middle East conflict, right, between Iran and Israel. And so we saw that last night with Israel retaliating to Iran, and overnight markets, especially in the energy sector, right, or even the stock market, really saw a very negative reaction. Stock market, right, crude oil was the opposite, a big price spike. And then now, as we're evaluating more news today, it seems like it wasn't, we saw no casualties. As of right now, it doesn't seem like we're feeling that escalation. And so we saw markets react accordingly, right? Crude closed right around unchanged to a little negative. Stock market did its thing. And so now, looking forward for the grain markets, we need to keep evaluating down south, right? Brazil crop, to me, Brazil corn, that safrinha corn crop still looks pretty good. Forecast isn't super friendly going out the next 15 days, but they've had good planting conditions and some good rain on that corn crop. Argentina is kind of a different story. That leafhoppers disease, right? They're really taking that down. The Rosario Exchange this week really dropped their corn estimates to where now they're much lower than what the USDA has. So we'll keep evaluating that. We're going to pay attention to planning progress here and seeing how favorable weather we're going to get. And we'll see what this market's going to do next week. We had commitment of traders report just released. It didn't tell us anything new. Funds are still very, very short in the corn, soybeans, wheat market. They added to those shorts just slightly, but they did still add them. So it'd be interesting to see if we start getting some type of bullish catalyst, right? And then is that going to trigger a short covering rally and the funds to start covering those shorts? And hopefully, right, that will equal some higher prices, and we can see that going into spring and summer.
Yes, especially on the corn market and beans. It is tough for the soybean markets.
Absolutely. The price action for this week, right? I believe we still close lower on the week, even given this little pop we've seen today. And so, yeah, a lot of negative markets, and sometimes it feels like any positive news, right? The market might open up a little bit higher, and it just seems like we see that selling off, and it's just been negative. So not a great week in soybeans. I agree, Cesar.
Now that we were going to talk about the livestock market for today on this morning, how is the cattle markets for today?
Well, for the week, Caesar, it's been a great week for feeders. The April contract for feeders is coming into expiration, so it's going to trade very close to the index. It was up 370 on the week, but the May and August feeder contracts were up 780 to $8 a hundredweight on the week. So a great week on the feeder cattle side of things. On the fat cattle side of things, April fat's up 257 on the week. June fat's up 542. August fat's up 480 for the week. So great week across the board in the cattle complex.
When do you think you'll get to know if the bird flew in the feeder cattle?
Yeah, that's a good question. And, it would require speculation on my end, but I'm in the camp of there's more of it out there than we know, and a lot of it's probably undiagnosed. I assume that some of it is in, whether it's cow calf or feeder or that population. But I think if we did enough testing that we would find it. But I'd go back to it's not a terminal situation. They get sick, decrease production, but it's not a terminal situation in the cattle market.
Yes,
to me,
sir.
yeah. Yeah.
Do you have any final thoughts on the corn market and planting cattle?
Connor, I'll go ahead here just a
Yep.
little bit more on cattle stuff. We had a cattle on feed report today, the April cattle on feed report, and the on feed number and the placements were very supportive, both coming in below the trade estimates and the range of trade estimates. The marketings also came in below, and that's a bit disappointing. It'll be very interesting to see how the trade dissects this on Monday. I'd love for the cattle market to have been open and to see the live reaction to the numbers in an open market with this report getting released during market hours. But unfortunately, cattle market reports aren't released during market hours. But we'll see how the trade reacts on Monday. Got a big weekend of geopolitical stuff with Iran, Israel, that drama. That could have a bigger impact than this cattle on feed report could at the end of the day.
Follow question. What do you recommend for those are locked up for corn market?
Yeah. So right now, we're entering into that historical time frame where seasonally, right, we see some very volatile markets, right? We hope it's volatile to the upside, but it can be the opposite too. So I think the most important thing is we need to make sure we're hedging our emotions going into the next 3 and 6 months. and manage them accordingly, right? If we learned anything from last year, is that these genetics can perform pretty well when we see below average rain. We see the futures market rally, and then suddenly, right, the rains come, the market can flip very, very quickly. And we need to be cognizant of that fact now, because when we're in the middle of it, the emotions take over. And so if we're looking at marketing, right, we're not ready. Maybe we're not ready to make sales at this time. I still think we should look at doing something on paper, protecting ourselves against that, the potential for a very, very bearish year, the next 6 months. But then also planning, we don't know what's going to happen with weather in South America here. And so let's make sure we're ready to take advantage of opportunities as well. I guess that's what I'd be doing. Brady, anything to add to that?
Same. Yeah, be prepared. These opportunities can be very fleeting and short-lived. Make sure you're ready to strike and leave flexibility open for the unknowns, right? You don't want to think you're 50% marketed and have some sort of disaster and end up being 100, 120% sold and not be able to reward a market that went higher than you thought was possible.
I agree that. Welcome back on the show. I visited our friend with Todd Gleason from the University of Illinois in Urbana from Dr. Temple Grandin in Urbana. It's pretty great and awesome experience. I enjoyed it as well. Otherwise, we were friends with the University of Illinois. We were going to be in the field for this weekend for the beans, but unfortunately, this markets are not so good with the beans. We'll talk you on Monday. Thanks for listening to Back Roads of Illinois. You can listen it on your cab and trucks. You can subscribe to my YouTube channel. Otherwise, see you soon. For Back Roads of Illinois, I'm Cesar Delgado. Have a good weekend.